Hello everyone, I'm Dr. Swati welcoming you to the Global Online Platform. So today we are continuing our session of targeting 1000 plus MCQs. Okay, and here we are covering entire syllabus of the commerce subject and with most expected MCQs. You know that the last last in June examination. There you have found that the basic questions authors names and the preponderance names as given asked in the question paper. So I'm covering these questions, this kind of question over here. Okay. So without delay, let's start our session of today. But before we go ahead, I will like to announce here that our new batch will be going to be started from the 1st of July, and you know that in every Monday new batches will going to be new batches is announced in every Monday. You will get a new batch, and here you will get now the global online provide you not a 20% discount. Here you will get a 50% discount if you register yourself for the paper 2. Okay, and the 50% discount, that means in the 5000 rupees, if you register yourself for paper 2, you will get paper 1 is free of cost. So the paper 2 plus paper 1 is in the 5000 rupees. This is a really nominal amount you have to pay, and you have to prepare yourself for the not only for the net qualification, but it's also you have a qualify for the GRF. Here GRF. Okay, so here we are targeting the GRF. Okay, and here you will get a complete course of the commerce and management, and daily live lectures is will be in the app, and recorded lectures is also available. Complete syllabus notes, full syllabus, mock tests, 4000 plus MCQs with detailed solution, and the PYQs with a detailed solution. And you know that the contact number is given in your screen. It is on WhatsApp only, and get in touch with this contact number. They will inform you more about how to get in how to register. Okay, and now how to just quickly tell you about how to download the global online. So go to Google Play Store, just download the global online, and after that you will register with your number, and after that you will get a section of the my course. Okay, after my course section, you have to type to whatever the course you do you want, the commerce or management. So just register. This is amount is now the special discount is given to you, that is 5000 rupees only. Okay, and after you register, the all the info, all the material or the video lectures are provided in the very systematic unit wise PDF format. So get in just join the global online platform. Okay, for your better study and better performance in the net examination for the GRF. Okay, we are targeting the GRF. Okay, now the start with the first question of today, that is who known for the pointing the relationship between the strategy and the structure. Okay, so who pointing the relationship between the strategy and structure? So this first option, that is Hubbard Simon, Tom Peters, and the C, that is Alpha Chandler, and the William Oichim. Okay, so who is propounded, or who is pointing out the relationship between the strategy and the structure? So the strategy and the structure is associated with the Alfred Chandler. Okay, Alpha Chandler. Okay, now the next question, that is the income elasticity of demand for the inferior goods. So the income elasticity of the demand for the inferior goods, for the inferior, because there's the goods are the inferior, having a negative negative relationship. Okay, so the simple question, that's why I'm not spending too much time on that. Okay, now just quickly tell you, that is effect of the change in income elasticity on the demand dependent demand. Okay, is upon the nature of the commodity. If the goods are the inferior, the demand of the which is going to be false, and the income for the consumer increases. If the income is increases, so the consumer are not interested to purchase the inferior goods, so the demand is indicative. Okay, now the next question, that is which what is the medium of the sample? 5 median. The question is about the median of the sample is given. So what we have to do, the 5 7 5 5 1 11 9 8 5 8. Okay, so the option is given in your screen. What do you do? You have to just arrange the data in the ascending order, like a 5 5, then again 5, then 8, 8, 9 and 11. You have to count it how many numbers are there. 1, 2, 3, 4, 5, 6, 7. So you have to make a pairs of the 3 3, so the middle value is 8, so that's why the median is 8. So option number 8 is right over here. This is a simple question, but most of the time in the examination center we have to get um confused. Okay, so that's why I'm taking this question, because they are just I'm taking this kind of question. Okay, now the minimum required, next question, that is minimum required paid up capital. Okay, paid up capital for the opening a balance payment according to the RBM. Okay, so the minimum require of the paid up capital for opening a payment bank according to the, if you want to open, if the payment bank want to open, so how much minimum amount they have to require. Okay, so the minimum amount is required the 500 crores, 100 crores, 300 crores or 200 crores. So for the payment bank, the minimum paid up capital is required, that is option number B, that is 100 crores. Okay, so you know that there are the two kinds of banking license that are granted by the RBI. Okay, universal bank license, that is a universal bank license, and the differentiated bank license. Okay, and the payment bank comes under the and the, you know that the payment bank comes under the under the differentiated banking license. And since it cannot be offer all the services that are the commercial bank offer. Okay, and in the particular payment bank cannot lead, and the, you know that in the payment bank, like Airtel payment bank, like India Post payment bank, is like any other payment bank, uh, but the operating on the smaller and the restricted scale. Okay, there are some it can accept the demand only. Okay, the saving and current account, not the time deposit. Okay, and the benefit of that, the expansion of the rural banking, access to the diversification of the services, and the social and the financial inclusions are the some of the benefits of this. Okay, and the what are the challenges the payment bank has faced? So the lack of customer awareness, because most of the customer not aware of this payment bank, and the lack of incentives for the agents, and lack of the infrastructure, or lack of the technologies issues are the some of the challenges issued by the payment bank. Okay, and one thing you have to note that in the norms pertaining to the minimum share capital may charge for time, and the students are required to okay, so do you have to require to request it to keep their updated records. Okay, so because this question is from the, you know that is a banking sector, so the you have to be upgraded. So now the next question, which is in your screen, is the capital budgeting decision. Okay, generate generates the constant and the cash flow each year, then the payback period. So the payback period is what? So here the option number 1 is given, annual cash flow divided by initial investment divided by annual cash flow. The present value of the annual cash flow divided by initial investment, and present value of cash flow divided by present value of initial investment. So what will be the right answer? You know, is the question is from the capital budgeting. Okay, and here the question is the payback period. The formula of the payback period, you know that the formula of the payback period is initial investment divided by annual cash flow. Initial investment divided by annual cash flow. Okay, so this is the basic question. What I have to tell you, that is in the payback period, it is a time to recover the cost of your investment. That is the payback period. In how much time you will get your amount back. Okay. Now the next question, that is unabsorbed depreciation can be carried forward to the subsequent year by the same assessee for the period of. So here the question is for the unabsorbed depreciation, and the unabsorbed depreciation we have the what is they want to carry forward. Okay, so the for unabsorbed depreciation, the carry forward of the subsequent year is option number A, 4 assessment year, 7 assessment year, no time limit, and the 8 assessment year. So you have to just, this is important because unabsorbed depreciation, if you want to carry forward unabsorbed depreciation, there will be no limit, no time limit, no time bondation, no time is given for this unabsorbed depreciation to be carried forward. Okay, clear? And which is given in the Indian Income Tax Act 1961. Okay, and they allow to set off of such unabsorbed depreciation against any other heads. Okay, then any other heads of income, and remaining the amount can be carried forward to the subsequent year. Okay, now the next question, which is in your screen, promise to be compensated wholly or partly. A person who has already voluntarily done something for the promiser is called, okay, is enforceability, non-enforceability, because without consideration, and the void and voidable. So here what a promise to compensate wholly or partly. So there is a compensation is given. Okay, compensation is given wholly or partly. A person who has already voluntarily done something, he has done something for the something for the promiser is enforceable. Yes, it is enforceable. Okay, it is enforceable because you know that in the agreement without consideration is not applied over here. Okay, and you know that the agreement, if the agreement is without consideration, is void. Okay, and unless it is a return or the register, or if the promise or to compensate or something done, or is a promise to pay a debt or barrier by the limitation of the law. Okay, and here the express the return, it must be expressed in written or be registered under the law if it is without consideration. But it is already given that is he is wholly or partly compensated, and the person who has already voluntarily done something for the promiser is enforceable. Still it is enforceable. Clear? Now the next question, which one of the following is a portfolio investment? Joint venture, acquisition, investment by the FIIs, that is if an foreign institutional investment, and the wholly owned subsidiary. So what will be the right answer? Who is one of the portfolio investment? For the portfolio investment, you know that the option number C is right over here. That is investment by the foreign institution investor. So what is a venture? Joint venture is a business agreement in which two or more parties agree to pool their resources for the purpose of their accomplishing a specific task, and this task can be new project or any other business activity. Okay, and joint venture uh, you know that which one of the following is a portfolio investment? So here is I think the joint venture is an example of the portfolio investment. Okay, and the ownership of the foreign bond is an example of the portfolio investment. So the if there is a foreign bonds, it is an example of portfolio investment, and the joint venture is an example of the portfolio investment. So here is a conflict between the option number A and C. Okay, so I will check it and will inform you shortly. Okay, the next question, which is in your screen, in the Luther Gulick POSDCORB, here for this abbreviation, what is the D stand for the division of the division of democracy, decision making, and the direction. So here, what is the first of all you have to just understand that is an American Luther Glick, okay, and the British management consultant and the Urvik, who elaborate the Henry file management ideas in their management paper, okay, and here is PO. What is the full form of this? So here is a P stand for planning. Okay. O stand for organizing. Okay. And S stand for staffing. Then D stand for, and C stand for, O stand for, R stand for, and B stand. So D stand for, I will tell you shortly. But what is the C stand for? Coordination. Okay, then O coordination is a CO, that means it is a coordination. See, coordination. That is, then R stand for reporting, and B stand for budgeting. So what is the D stand for? Division of work, or the direction, or the decision making, or the democracy. So here is a D stand for directing. Okay, so the D stand for directing. You have to learn this abbreviation, that is P for the planning, organizing, staffing, directing, coordination, reporting, and the budgeting. Clear? So it is given by the Luther Gulick. Okay, and after that it is elaborated by the, and after that is it is elaborated by the Urvik. Okay, Urvik. Landel Urvik. Next question, that is a distribution that is formed by all the possible value of a statistics is known as, it is known as a geometrical distribution, normal distribution, sample distribution, and the binomial distribution. So what would be the right answer? Distribution that has all possible value statistics. That means there is a possible, there is a no biasness, there is a possibility that all the values are included. So this kind of statistics are known as a normal distribution. Okay, so there is a normal distribution. So now the one thing was over the given that it is a sampling distribution. So here the sample distribution is a refer to the probability of distribution of a statistic that comes from choosing a random sample for of a given population. And it's also known as, the sample distribution also known as a finite finite sample distribution. Okay, finite sample distribution. Clear? And it's having the types, so that is the sample distribution having type, that's the sample distribution of mean, sample distribution of the proportion, t distribution. These are the types of the sample distribution. Now the next question, which is a matching pair. So here is the empirical bank, Reserve Bank of India, State Bank of India, and Industrial Development Bank of India. So what would be the right answer? You know that is the empirical bank having is the first there, this is the oldest bank. So here is a 1921 is the empirical bank. Reserve Bank of India, you know that Reserve Bank of India is 1935. Okay, after that the State Bank of India is the State Bank of India, that is 1955, and IDBI is 1964. So here is C C only is the option C, A, B, D. So the option number D is right over here. Clear? Now, in case of the given goods, a fall in its price 10 to. If the in case of given good, if the falling price is falling price is tend to demand remain constant, increase in demand, reduce in demand, and abnormal change in demand. So in the given goods, if they having the positive relation, okay, the with the price and demand. Okay, if the price, what is the price is decreases, so demand is also decreases. If price is increases, demand is also increases. So what is happening over, if the fall in price, so reducing the demand. So option number C is right over here. Okay. And one more thing, that is the given goods is created by, or it is given by the economics, his name as a Scott Giffen. Okay, Scott Giffen. Either they are not as the Giffen, but they has the as the name of Scott. Okay, so the Giffen, during the poor time, when the notified the notice that people were buying basic foods even if the price kept going up. Okay. And given goods, one more thing which I have to tell you, that is given good demand curve is could look two different way, either in the running starting from the left and going to the right, either from the is from the left to right, or you can say it's look like a C, like a is like a C. Okay, it's like a C. Okay. Okay, so the demand curve of the given goods is look like a C shape. Okay, C shape, you also keep it in mind. Okay, and one more thing, that is in case of given goods, the positive income change income effect is stronger than the negative substitution, so that a consumer buy less when less of it when the prices falls. Okay, so that's why. Now the conditions of the given goods, that is the lack of availability of the substitute, and the state of the customer, goods is inferior, goods must be widely consumed. So these are the condition of the given goods. Okay, now the next question, the hearts of the internal records system is. Okay, so the internal record system, the heart of the internal, what is the heart of the internal record system? Payroll, purchase order cycle, order to payment cycle, or expenses cycle. So what will be the right answer? The heart is option number C, that is this is the heart. Okay, so you can remember like this, that is the order to payment cycle. Okay, so the order to payment cycle, this is the heart of the internal record. Okay. Now the next question, given the constant k and the k is less than k. Okay, k, sorry, this is a k capital, there is a mistake. Okay, there is a mistake. The given constant k, the capital cost of capital, cost of equity, and the cost of debt. Okay, and if the cost of debt is a is less than the cost of equity. Okay, so the WACC, that means the cost of capital. Okay, cost of capital KO will be decreased continuously with increase in financial leverage measured by the debt value, is given by income, net income approach, net operating income approach, hypothesis proportion, or the traditional theory. So who is given that? So you know that the question is about, I will read the like over here. Look, look. So what he is talking about that there is an when the KD and K is constant. So K this is cost of equity, and the cost of debt is constant. Okay, and the what is happening over here, the cost of capital cost, overall cost of capital, that is decreasing. So what is happening, this is decreasing, and here what is, the k is greater. So if the k is greater, so it started from the over here and here is going, so that is the ko. So this diagram is denoted from the net income approach. You know that this diagram is denoted to the net income approach. Okay, now the next question, pest analysis is for Option number A, a checklist to ask from the political economic strategy and that all the technological development can influence on the industry and the a company. B, a broader frameworks to help the manager understand the environment in the which of their business and operations. C, checklist from the for forecasting political economic strategic and technological factor and the framework for the strategy analysis for the internal and the external environment over here. Okay, so what will be the right answer for this question? So the right answer is option number B. You know that paste analysis. Paste analysis is for the helping the managers to understand the environment in which their business is operating. Okay. So the paste analysis is for the actually there is measuring tool which used to assess the marketing for the particular product or a business at a given framework. And the PACE stand for political. P for stand for political. Okay, then the E stand for economical. Okay, E stand for economical, and the S stand for the social, and the T stand for the technology. Okay, so there is a no strategic, okay, no strategic analysis. Okay, so here is the right answer. That is a broader the frameworks to help the manager to understand the environment in which there is a business operation. Then the Taylor accept the function. Taylor accept the functional organization is against the principle of division of unity of command and the span of control and the centralization. So the Taylor accept the function organization is against the principle of unity of demand. Okay, is the unity of demand. Okay. So the function of organization is that has to develop from the increasing the complexity of the business operation, particularly in the production department. Okay, and they need to have the specific to the airline and personnel. Okay, and here the Taylor principle of the unity of command is related to an organization subordinate should support to take an order from only one boss at a given point of time. Okay, so this is against the principle of unity of demand, the concept of the Taylor. Okay, now the next question, the rate of depreciation on the building, residential building and other hotel and the boarding houses. So what is the rate of depreciation? So either for the building, you know that there is a 5%. There is no need to explain extra explanation. Okay. Next question, when a party to a contract transfer his contractual rights to another. Okay, so the is known as a rescission of contract, waiver of contract, discharge of contract, and assessment of the contract. So what will be the right answer over here? When the party to the contract transfer his contractual right to another. Okay, transferring contractual right to another. So it is an assessment of contract. Okay, and occur when one party to an existing contract and hand for offer the contract obligation and benefit to the another party. Okay, so that's why the assessment, this is an assessment contract. Clear? Next question, where Dash is the world's largest single market with 27 members countries and the common currency and the millions of consumers. So what will be the right answer? NAFTA, EU, or there is an this is option number C here, and option number B is given. So there is a typing mistake. Okay. So what? So NAFTA, EU, APEC, or the ASEM. So the right answer, the largest, world largest single market with 27 member, with a common currency, with a millions of consumer, is having the option number C, that is EU, that is European Union. Okay, and it's formed in 1993. Okay, and it's also known as Maastricht. Okay, Maastricht. Okay, so thank you so much. Here we are completed more than 15 question. Okay, uh So see you soon in the next lecture. Okay.